Good afternoon and welcome to today's Learn at Lunch webinar. Today's speaker is Dr. Amy Hagerman, the OSU Extension Farm Policy Specialist. She will give an update on federal farm policy, and if you have questions, please ask them through the chat box at the lower right corner of the screen, and Dr. Hagerman will answer them at the end of the webinar. We have additional farm management resources available at our eFarm Management website. I'll provide a link to this site in the chat box. Amy, I'll turn it over to you now.
Okay, thanks, Brent. Can you hear me?
Yes, I can hear you.
Excellent, thank you. Well, I appreciate everybody jumping on today to do a few quick updates. This is actually a really good week to be having this update because there's a lot going on right now. So let's just jump right in. What's happening in Washington, D.C. right now? We have a couple of things going on. Some of the big things are the appropriations bill for USDA. Those discussions are happening right now. The 2018 Farm Bill discussions are happening right now, negotiations actually. And then also trade negotiations are happening right now, and we're in a really interesting period for all of these things. So I'm going to try to just kind of lift and pick and touch on a few different things within our time here together. And then I'm very happy to take questions as well. But certainly everything that I'm going to be discussing today is all going to be currently under discussion. And so there could be a lot that changes very quickly. And, you know, today is September 25th. By September 26th, the news could be something completely different. So please take everything I say today as an update, and it's in no way intended to be saying that anything is set in stone. So why is this such an important week? It's because we have a couple of big deadlines coming up. September 30th is the end of the federal fiscal year. And that means that there needs to be funding for USDA by the end of this week, and that we also need to have a farm bill in place by the end of this week. So particularly for the farm bill, which is the first thing I'm going to talk about, and then for the trade negotiations, which is the second thing I'm going to talk about, we got some deadlines coming up here in the next week where we'll know a lot more. So the Farm Bill, our current Farm Bill, 2014 Farm Bill, is set to expire, as I said, on September 30th, and that means that we need to have a 2018 Farm Bill in place. We had some really quick early movement around this. June 21st, the House passed their version of the Farm Bill, the Agriculture and Nutrition Act of 2018. On August 3rd, the Senate passed their version of the Farm Bill, the June 28th, the Agricultural Improvement Act of 2018 passed, and then on July 18th in the House and August 3rd in the Senate, there was a vote to send those two versions of the bill to conference where members of both the House and the Senate would come together and work out the differences in those two bills. They will then send a combined bill back to a full floor vote in both the House and in the Senate individually. And once those pass at that point, it will go to the White House for signature. Now, we don't have a lot of days left between now and September 30th. So the likelihood that we're going to get a farm bill in the next few days is slim at this point. But that is, you know, one of the possible things that could happen. We could get a farm bill. Sometimes these things move very, very fast right at the end. It's a slim chance at this point, but I think it's a chance. The other things that could possibly happen is we could see an extension of the 2014 Farm Bill. I haven't seen any movement on that up to this point. The third thing that could happen is that the Farm Bill could lapse and revert back to 1949 law. You know, you'll start hearing some things, some discussion that's happening that we'll talk about in a little bit about what the consequences of this could be. But the position we're at right now is that we have two bills that are in conference for reconciliation. And what is going on kind of in those two bills, there is still a focus on risk management. There's still support for ARC and PLC. You guys may be familiar with those from the previous Farm Bill. There's support for crop insurance in there. It's still maintaining this concept of having nutrition and farm programs remain together in a single bill. We haven't really heard a lot of talk of breaking those out, as happened for a brief period of time in the last Farm Bill negotiations. But there's some really sharp differences that appear to be stalling progress, particularly around changes in conservation programs and also in the Supplemental Nutrition Assistance Program, SNAP, which you may still think of as under its former title of food stamps. Both bills overall are making an effort to increase efficiency and cut costs, but there's some very different philosophies on how to achieve that. And when you're trying to reduce the overall spending in a bill, or at least keep it very, very similar to what it has been, nobody wants an increase in the amount of money in the Farm Bill seemingly right now. So what that's going to mean is that you're going to have different groups trying to move different pieces in order to make change happen, but at no additional cost overall. And I think that's where you're seeing a lot of differences that are going to have to be worked out before we're going to get a Farm Bill in place. So kind of what's happening in the news and social media right now is that you're going to see a lot of talk about we need a Farm Bill, we need it soon. We have a lot of situations that are happening that make a timely passage of a Farm Bill important to our producers. And, you know, what's going to happen if we don't get a Farm Bill? So I want to spend just a few minutes on what happens if we don't get a Farm Bill, a 2018 Farm Bill, or an extension of the 2014 Farm Bill. You'll hear some in Twitter, particularly, some people are saying, well, it's not really meaningful until the end of December. And there is some truth to that. I mean, nobody needs to panic right away if we don't get an extension passed on the Farm Bill. So, you know, it's all kind of take a deep breath and keep calm for a little while at least. There are programs, however, that will have funds but no spending authority, and programs that will have spending authority but no funds if the Farm Bill is allowed to lapse, particularly some of the market development programs and some of the conservation programs. Because we are going into sort of the last crop year on the current Farm Bill, there will still be payments for this year on many things. But, you know, I think we wait out this week and we see if we get an extension, I think is probably the best case scenario at this point. So everybody stay tuned, and we'll all take deep cleansing breaths together, and we'll get through this week. But kind of on this note of the tie-in between trade and Farm Bill, a lot of the motivation behind a timely passage of Farm Bill are really two things. One is the place where we're at as a farm economy in terms of having high expenses, having low farm net income, and the importance of those safety net programs and crop insurance programs in this particular point. And then also this idea of market development, because we do have a lot of things happening in the trade sphere that are impacting our producers. So let's talk a little bit about some of those trade things that are happening right now. We have trade negotiations going on with Mexico and Canada, and actually I should have put South Korea on there as well. Actually, just yesterday we had an announcement that they have retooled the U.S.-South Korea Free Trade Agreement, and so we might see some movement around that, we have a tentative agreement. You guys probably saw the announcement on that, on a retooling of the agreement with Mexico within what's sometimes commonly called NAFTA 2.0, but we don't yet have agreement with Canada on that. And the next 90 days are going to be really critical around whether we get a trilateral NAFTA that includes Mexico, Canada, and the US, or if we end up with some sort of bilateral agreement just with Mexico. And that has a whole host of political questions that go along with it. So be watching the news in the next 90 days around what's happening on that. We also have what is commonly being referred to as the trade war with China, and this escalation of tariffs and retaliatory tariffs that are coming about as a result of that. So as a result of these questions, we might see some different figures on the impacts that these tariffs are going to have on agriculture. And that's because it really varies by product on what the impact is going to be. But remember that a lot of these trade discussions really aren't focusing on agriculture, with perhaps the exception of dairy and Canada. They're focusing on other kinds of products, for example, automobiles with Mexico. So agriculture is really kind of getting caught in the crossfire, if you will, in this process. And towards that end, there was an effort made by Secretary of Agriculture Sonny Perdue to offset some of these market disruption losses that agriculture producers might have been feeling. And in July 2018, you guys saw the announcement, I'm sure, that he announced there would be up to $12 billion in CCC funds to offset some of these losses that would be aimed at targeted commodities and in specific programs. Now, these words "up to" shouldn't be taken lightly. There is no obligation to pay a full $12 billion in funds out. It's just that they have the authority to spend up to $12 billion in funds. So don't take those two little words too lightly. In August, it was announced how the first series of payments of that would come out. So there's going to be 3 different mechanisms. The Market Facilitation Program, which is the direct payments to agricultural producers of these targeted commodities, and that's going to be initially a $4.7 billion package. The Food Purchase and Distribution Program at $1.2 billion, which is going to be a buy-up of specific commodities to go into, for example, school lunch programs. And then also the Agricultural Trade Promotion Program, which is really aimed at developing new markets. And we shouldn't underestimate this idea of developing new markets and what that could mean. USDA just came out with their export forecast for 2019, and they're still showing that even though there will be expected to be a significant decline in exports to China, specifically around soybeans, because of things happening in other parts of the world and pushing into other markets, there might be an opportunity to actually still maintain or even slightly increase export values overall across all commodities. Remember, this isn't, saying that each individual commodity would not see a decline, but just as a total agricultural exports might be able to still see the same levels or even a slight increase. Really, soybeans are expected to take the highest hit out of those. So if you want any details on exactly how the rates are calculated that we're going to touch on here briefly, I've put the link down at the bottom of the slide. You can just click on it and it'll take you to the methodology report. Basically, they did a projection of where trade could have been based on what we knew prior to any tariffs being put in place versus where trade actually was with the tariffs in place, and divided that by production to get that estimated payment rate. So these are the actual payment rates. A few pertinent details, if you hadn't heard them. First is that payment is going to be on 50% of actual 2018 production. Now, I've heard people say this two different ways. Either they'll talk about it in terms of, okay, for wheat, you're getting 14 cents per bushel on half of your total bushels, or I've had people just say, you know what, that really just equates to 7 cents a bushel on everything you produce. So whichever way you want to think of it, but the actual the details is actually that the payment is on 50% of actual production. For people who lost a crop in 2018, that's a significant detail. Sign up is from September 4th to January 15th, so don't miss those deadlines. Requirements are active engagement in farming and adjusted gross income of less than $900,000 and conservation compliance. These should look really familiar. These are the same requirements that are there for other programs. But it's not tied to your $125,000 payment limit that you have for other programs. This is a separate $125,000 payment limit. And it's separate for the crops that are listed in this table and for dairy and hogs. So if you're a combined operation that has both, for example, hog production and crops, then you would have two separate payment limits that those would go under. The decision on the other 50% of production will be made in early December. And, you know, this will all depend on how these trade negotiations are going, how that's affecting the amount of trade that happens in the second half of 2018. Does it stay within those projections? Does it go lower? Does it actually take advantage of situations in other countries that is allowing us to explore some new export opportunities? But a lot of it's going to come down to this question of, will we see longer term impacts from these tariffs and the trade wars? How much will the uncertainty around our trade relationships affect our world trading partners, and are some of those effects going to be longer run, not because the tariffs are still in place or haven't been removed, but because we have to rebuild relationships after this uncertainty? I think that's kind of one of the key questions in how this recovery will play out across time. So I tried to move pretty fast to allow some time for questions and also to allow everyone to have a little bit of time left in their lunch hour. I really just wanted to touch on some highlights. And I think the really key takeaways is that, number one, this week in particular is a really critical week. We're going to be watching for some key announcements this week in some different areas. Two is that the uncertainty that's being created by a lot of things happening right now, whether it's not having a farm bill in place, whether it's having trade agreements currently under negotiation, these are all going to contribute to the uncertainty that producers are feeling, that companies are feeling, and those may be reflected in the markets as different announcements are being made. And then also, I think just to remember that we don't really know what is happening behind closed doors, whether it's the trade negotiations or the Farm Bill Conference Committee. We don't have all the details of exactly where we're at on any of these things. So, we all just need to kind of take a breath and have some patience and really watch for the announcements. Feel free to reach out to For example, FSA or your crop insurance company, if you have some specific questions around the impacts of a farm bill, depending on what happens this week, feel free to reach out to your elected representatives and ask them questions about what they're hearing or, what's happening at that level as well. So, I would encourage you to just stay updated, stay tuned in, and certainly at Oklahoma State, we'll be putting out information as soon as we have it. Just a final plug for Brent is that the link to do the feedback questionnaire is here on the last slide. I, in particular, would really appreciate it if you could give some feedback. Please feel free. My contact information is there. Please feel free to reach out to me. I'm very interested in whatever you're interested in. So if you have a specific topic you would like some more information on, please do reach out to me. And with that, Brent, I will turn it back over to you for any questions.
Thank you very much, Amy, for an excellent presentation on a very timely topic. Are there any other questions? I haven't seen any in the chat box in the lower right corner. That's the place to ask them if you do have any questions. And I would like to also remind everyone that our next webinar will be on October 9th, also a Tuesday, and Rodney Jones will talk about tools and tips for managing in tough times. So that's our next scheduled webinar on October 9th. If there are no other questions, we will wrap up today's webinar and see you next time. Thank you everyone for joining us. Good day.